why the Fed has plenty of room for rate cuts going into 2026, and why you should care. The next Fed chair could slash rates in 2026. A lot. It's not just speculation. That's coming from the people who are candidates for the actual Fed chair. If this happens, it won't just move the market. It's going to flood the market with buyers. And what happened last time that the market got flooded? Well, home prices increased. So there's a lot of people that need to start looking at purchasing a home because, my last video on this on my Instagram, it didn't really go off. But the idea behind it is that this is actually a potential thing that could happen. And with the articles that are coming out, it is more than likely going to happen, right? You have people who are up for the Fed chair now who are going to be planning on slashing rates. And it's not just from, speculation on the article or whatever. They are actually saying these things. Interest rates have been one of the biggest issues that we've been facing in the housing market over the last 3 years. We went from emergency level hikes to Feds trimming rates slowly. We've been seeing that every single month lately. But the fight between inflation and growth is now officially over. We have had really good work reports. We've been having the S&P 500 is up. There's so many things that are showing that the economy is at a very good space. The next Fed chair even said there is plenty of room for rate cuts going into 2026. Who said it and why it matters? This is coming from Kevin Hassett and Jerome Powell together. They agree that this needs to happen. There are others out there in the Fed that are worried about rate cuts, right? And what it's going to do to the pricing, which is a reasonable thing to be worried about. Now, with all of that being said, what the true thing and what it actually means to you are going to be a couple different things. One, the housing market. Lower rates mean cheaper mortgages, which means more buyers in the market, which means home prices will move upward. Home buyers will refinance. Anybody who bought over the last 2 to 3 years are going to be refinancing into those lower rates. Builders might actually start accelerating the amount of homes that they are building. The big thing about this is if we do see rates fall, we're going to see more borrowing happening, which obviously in the real estate market, that's a good thing because people are going to be buying houses. The market will be hot. But that doesn't always mean for a strong economy. And I'm no, economic expert, but I do know the real estate market. And that is something that I'm going to focus on with you guys. If you are focusing on buying a home in 2026, the Fed chair comes up in May. I don't know the exact date, but it is in May. So what you're going to want to do is make a move prior to that, because everybody who does, let's just say that the rates do lower in 2026, and not just by increments, but let's just say they do a decent drop in May or June. If that happens, we are going to see more buyers in the market, which means that those homes are going to become more expensive. And then we're going to be in a situation where it's not necessarily a very high buyer's market anymore. What we've been noticing, and this is for Metro Atlanta right now, is that we are noticing that we are in a decent buyer's market. We are getting the closing costs. We are getting repairs done. We're getting concessions at closing for people to be able to make repairs after closing. And I'm not talking about $5,000. I'm talking about $10,000, $20,000, $30,000 in repairs, or, what may seem as repairs, floors, paint. These types of things are all being negotiated inside real estate deals right now. And that's something that a buyer really needs to pay attention to, because you're not going to see those types of things with lower rates. In my personal opinion, I think that the better option is to buy a home right now, get into something that you can afford, one. Two, that you can fix up or put some money into. And then on the back end, when these rates fall, let's just say in the next year or two, then you're going to be able to sell that home for more, right? As soon as these rates drop, buyers will flood the market. You'll be already 3-4 steps ahead of them because you're in a home, you're building equity. And as soon as that market moves upward, you can then sell that home for more money, just because of the demand is higher. And so there's a lot of things that we can talk about and work through. So if you guys have questions, reach out to us. We're more than able and willing to answer these questions that you guys have. We've got a lot of videos coming out. We're really focusing on our content right now. So if you are liking what we're putting out, like, share, subscribe, make sure that we're in front of you going into these next few months, because we've got a lot to tell you. we've got a lot to focus on. We're going to keep you posted on what's happening in the real estate market in Metro Atlanta. We're here for you if you need us. And when you are ready to buy a home, we would love that opportunity to work with you.